The Kamala Harris tax hikes that she has announced will affect 62% of Americans. There are several articles about this. You can Google them. I thought that they're out to watch out for you, the little guy, or the middle income earner. Actually, many politicians, tax revenuers, that are trying to come up with the money to cover their deficit spending. If you're not aware, during the pandemic, the government spent 3 times more than what they brought in. The IRS in 2020, they were bringing in about $4 trillion in tax revenue. They refund about $800 billion. Their net income was $3.2 trillion, and they spent triple that. If you or I were to go out and we made $100,000 a year, but we spent $300,000 because we went out and borrowed the other $200,000, we have to pay that back. We have to tighten our belt and increase our income or something. The government, after the pandemic, kept spending. People are in the mood to pass this, and so they've been spending double what they bring in. So they print money, which is a hidden tax, and that causes inflation. And they have all kinds of tax proposals. They think it only affects the wealthy. It's all smoke and mirrors. It will affect 62% of Americans. Listen close in this episode, and I'm going to show you why. So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for 5 decades. But in college, I majored in economics. And it's amazing to me how many politicians have never run a candy store before. They don't understand basic economics. So stay with me and you'll see, because so many Americans, I think, get duped into, for peace and happiness and joy. And they're going to get duped, and they're going to wonder what happened when their lifestyle does not provide joy very easily, okay? So when we have irresponsible government spending or the printing of money, if you keep your ear to the ground, the Biden-Harris administration has had a lot of tax proposals that they have had lined up. If Harris succeeds in winning the presidency, she's going to put these on the fast track. And so let's go through these individually to show you how this will affect 62% of Americans, okay? So the first one is she wants to increase income taxes. And this is, to me, is very obvious. They are going to do it sometimes with smoke and mirrors, and the government giveth and the government taketh away. They do that by sometimes restricting deductions and sometimes increasing the tax rate. And they act like, well, this is only going to affect the higher income earners. And yet Biden said anybody making over $400,000 will not have to pay one more dime in tax. And so they have all kinds of ways that they are going to be increasing income taxes. And some of them are direct, but most of them are indirect, where you don't actually see it. So one of the big ones is this next one, by reducing 401k tax benefits for higher income earners, okay? So if you earn a certain amount of income, you won't be able to have as many tax benefits from contributing to a 401k. Well, that's basically a tax increase. They can claim, well, I didn't increase taxes, I just took away some of the benefits. Well, that's in essence an indirect way of raising income taxes. This is just one of their ideas. Another one is to dramatically increase capital gain taxes. Now, if you don't know what a capital gain is, that's usually if you own an asset, a stock, or maybe your house or other real estate, and you own that for several years, and then you sell it, then you have to pay a capital gain tax on the gain realized. And if you've been doing 1031 exchanges and buying like properties, you've been deferring, not eliminating, but you defer. And then if you think you're going to pass that down to your children and they get a step up in basis, that's the strategy that a lot of people have used to avoid capital gain taxes on highly appreciated assets. Kamala wants to do away with that. Do away with the step up in basis And one way of doing that is to tax unrealized capital gains every single year. If she can't get it done one way by eliminating the step up in basis, she's going to do it every year, and now she gets the money sooner than later. Okay, so what are we talking about here? She wants to double them. Capital gain taxes. If I buy a piece of property and, for $100,000, and then 10 years later, I sell it for $200,000, I made a $100,000 capital gain. Now, in actuality, if the house appreciates from $100,000 to $200,000 in 10 years, 10 into the rule of 72 means my average appreciation was 7.2%. Well, I can assure you, inflation was the majority of that 7.2%. Because of that, Republicans have always felt like capital gain taxes are unfair. You're taxing people for inflation. Why do you do that? That hurts people. You're paying tax on inflation. Who caused the inflation? The government, okay? So that's why Republicans say, well, let's only tax capital gains when you realize them, and let's tax them at half. And that's why capital gain taxes under Trump were 20%, and then Obama's health care initiative takes another 3 to 4% of that to pay for Obamacare. Okay, so basically the capital gain tax rate is 20% is the top rate under the Republican viewpoint. Because you're paying tax on inflation, they don't think you should pay your ordinary income rate. Kamala doesn't care. She wants Americans to pay the ordinary income rate, which is 37%, but that's going to jump up to 39.6%, just under 40% at the end of 2025 when the Trump tax cuts expire. And even if Trump wins, they will likely expire because Congress doesn't have to do anything. It just sunsets. So we're going from 20% up to nearly 40%. It doubles. So she's going to start taxing capital gains at 40 instead of 20. That's going to hurt a lot of people, but here's where it's really going to hurt a lot of people. 62% of Americans own homes, are buying a home, and she wants to tax unrealized capital gains annually. You can't wait and keep deferring and then do a step up in basis. If you have these properties and your house goes up from $100,000 to $107,000 this year, she wants to tax you on that $7,000 that your house went up in value, that your real estate went up in value. Before you realize, that's what a piece of paper says, an appraisal. That's what a market analyst says. That's what Zillow says. Does that mean you can really sell the house for that? What if you pay tax every year on what your assets are appreciating, and then all of a sudden we hit a 2008, and your house goes down in value like mine did from $1.5 million down to $1.1 million, and I didn't lose any of that because of keeping my equity separated. That's another topic. But folks, it took several years before my house came back up to $1.5 million. Do you think if she does this, she's going to refund you the tax she charged you when your house went from $1 million up to $1.5 million when it goes back down to a value of $1.1 million? No, she may not tax you for a few years, but she's not going to refund it. I can almost guarantee you that. But see, this is unbelievable that the government is going to tax you on unrealized capital gains. And not only that, that's taxing inflation, and they're going to tax you at double the tax rate, 40%. They create the inflation and then they tax you for it. Hello? Now, they want to increase estate tax. What's that? That's the inheritance tax. Now, usually estate tax or inheritance tax is not due until you have to file a 706 form 9 months after the death of the second, if your parents are alive, after the death of the second spouse. Because if a father or mother, for example, passes away first, the estate transfers to the spouse with no estate tax, okay, at the first death. But at the second death, you have to file a 706 form within 9 months, and that's all of your parents' assets. And everything down to their underwear. You have to list all their assets. And then they may charge you an estate tax. Now, under Trump, between a husband and wife, there was a huge exemption. Kamala wants to bring that back down again so that any inheritance over 5 million, or maybe even down to $1 million, anything over $1 million, it used to be 600,000. And the estate tax used to start out at 37% and top out at 55%. Well, under Trump, it topped out at 40%. Kamala wants to raise that maybe from 40 up to 67% and lower the threshold. Why? Why do tax revenuers want to tax the children before they receive an inheritance? Because they're actually taxing people that are 6 feet under, and they can't complain about it. And the heirs are just going to have to take whatever they get. But see, the government, when they're hard up for money, they want to tax when wealth is transferred that your parents create down to the next generation, because they don't really deserve that. The government gets that, okay? So that is the estate tax. Kamala wants to increase the corporate rate, ASAP, from 21% up to 28%. Folks, it's interesting to hear how they pitch it. They go, well, that's only 7% more. The corporations can afford it. Come on. Folks, that's not a 7% increase in money the corporations pay out. It's a 33% increase. Why? See, most corporations only operate on a 2 or 3% profit margin. So they don't have the money like she thinks they do. And so when corporations are forced to pay, instead of $210,000 on every $1,000 of profit, they have to pay $280,000. How much more is $280 than $210? 33% more money. And the corporations can't just afford it unless they do what? They lay off people and they change automation. That creates unemployment. They raise the prices of goods and services, and that causes inflation. And these politicians don't understand that. They don't realize by raising the corporate rate from 21 to 28, oh, they can afford it. Why all of a sudden unemployment goes through the roof and inflation goes through the roof. Okay, which leads us to the next one here. They thump themselves on the chest. Oh, I was responsible for raising the minimum wage in California from $15, $20 to $21 an hour. And look at all the restaurants that said, we can't handle this. Look at the businesses that have said, we're leaving. And they go, well, come on. Well, okay, either those employees now are a drain on the government welfare, or else if they did hang in there and they got a raise to a minimum wage, that minimum wage is all, that extra raise is gobbled up at the gas pump, at the hamburger stand for their lunches, when they go to buy eggs at the grocery store or buy a used car. It doesn't do any good. It just is a spiral, okay? And then they want to talk about healthcare initiatives. Oh, that sounds good. Well, they want to give healthcare and Medicare, but they want to give it for all. And they want to give it to 20 or 30 million illegal immigrants. Well, we're charitable here in America. We're going to give you healthcare, free healthcare. Well, what happens when people hear they get free stuff? They keep coming illegally. And then also student loan debt forgiveness. Biden has tried this several times, which is unconstitutional, but he keeps trying different angles to just give free college tuition. I think the big motive there is he wants their votes, okay? Because they'll vote for him if he forgives the $20,000, $50,000, $100,000 of student loans that they took out. Who's paying for that? The people who took out student loans and paid them off and went out and started working, and yet he just wants to give all of that stuff for free. Folks, these tax proposals, these will hurt us dramatically, and hopefully you're connecting the dots. It's not just going to be the rich, the wealthy corporations. It's not going to be just the high income earners. This will all dramatically affect. If she taxes capital gains and you own a home and it's worth $150,000 and it goes up to $160,000 next year and you have to pay tax on the house going up 10 grand, where are you going to get the money? It's in the property. You haven't realized it yet, but you've got to cough up tax on that $10,000 of appreciation every single year. You're going to be borrowing equity lines of credit. You're going to be saving. What are they thinking? They're going to create more debt and credit card debt in this country. They're going to force this country into bankruptcy, taxing people on money they haven't realized yet. If you want to protect yourself, I would recommend you convert a lot of your income to tax-free. My favorite vehicle, without question, is a properly structured, max-funded, indexed universal life insurance contract. And this is how to diversify and create the foundation for a tax-free retirement so that you're immune from these things. And so my book, The Laser Fund, has been flying off of our warehouse shelves. It retails for between $20 to $60 on Amazon. If you buy it on Amazon, thank you. But I'll give you a copy for free. To claim your free copy, click on the link below or go to laserfund, laserfund.com, and contribute a nominal amount towards the shipping and handling. I require a little bit of skin in the game, and I'll pay for the book. I'll fire out a hard copy to you via priority mail. If you're a left brain learner, 200 pages, have the charts and graphs and explanations. If you're a right brain learner, you flip it over, 100 pages, 12 chapters that give 62 actual stories of how you can implement these strategies, okay? If you want to use both your left and right brain, your whole brain, you can read both of these books. But when you're in there claiming your free copy, if you like to listen and learn or watch and learn, there's audio and video formats available for your investment. You can schedule to attend a free educational webinar that I do on a weekly basis. No cost or obligation, but you can schedule an appointment with an IUL professional that will show you how to do this correctly. No cost or obligation, but why do I do that? Because out of over 99% of financial advisors in America who think they know what they're doing with IUL, they don't know how to do it correctly. And then it's a disaster 5 or 10 years down the road. If you want to achieve what I talk about on this channel and in this book, it would behoove you to talk to somebody who really knows how to set it up correctly. This is not about me. This is about you and your brighter future so you can be immune from all of these tax proposals and increases that are going to be coming. Mark my word.